Good afternoon, everybody. Some interesting Berkshire Hathaway reports coming out. I can't talk about it till after I do the disclosure. Today is Monday, May 15th. Hope everybody had a great day today. 10 after 4 p.m. Eastern Time. I'm an associate member of T3 Trading Group, which is an SEC registered broker dealer and member of FINRA SIPC. All trades placed by me are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. There is the position disclosure. I'm in 19 longs now, 0 shorts. Am I nervous? Should I be a little bit nervous? Yeah, a little bit nervous. The market could break down, but home on the range, right? Oh man, I can't believe I said that out loud, but that's the name of today's afternoon meeting. Compliments of Brian's idea as we just continue to be in this range. Anyway, Berkshire Hathaway, Mr. Warren Buffett, putting a little bit of cash to work, increasing his Apple position by 20 million shares. Wow. I feel like he hasn't bought any new Apple in quite a while. Bank of America's popping. I just sold, oops, I may have just sold some, or maybe not. They got out of RH entirely. Warren Buffett, no longer in RH, that's down ticking. Started a new position in Capital One, up 9% here, over 9%. Increased Bank of America by 22.7 million shares. He's buying the dip. He's buying the dip. He has sung praises of the CEO recently as well. So BAC popping a little bit on that, not bad. All right, that's the after hours news that I'm seeing. Let's hop over to our charts. Inside day for the SPYs. Another inside day for the SPYs within the range. I think that today was a good bit more bullish though. Even though it's another range-bound trading session where we did not do very much. At the end of the day today, the S&P finished up 0.3%. The NASDAQ finished up 0.5%, but here's the big one. The IWM, the Russell, mid caps and small caps, up 1% in a quarter. Where are the goats? Apparently the local brewery over here is doing some goat petting at 3 o'clock local time, 5 o'clock Eastern. So I am trying to head out of here because the wife and I would like to go pet some goats apparently. She was supposed to go with a girlfriend of hers, but her girlfriend's daughter is sick, and I guess I'm the replacement. I'm the replacement friend. So should be fun. Sure. That was after the cows got out this morning again. Only a couple of them got out today, though. So that's always fun when you're going outside and seeing goats, seeing cows where they shouldn't be. But I didn't have as much time today. Today was a busy day, so I couldn't really help getting the goats back in. There was only a couple of them, so good old farmer rancher Bruce over here, I think, has it under control, though you never know. Anyway, back over to the market. So positive day here across the board. SPY's up 0.3%. It is an inside day, so another range-bound day within the big picture range. I'm getting tired of talking about it. But like I'm saying every day, just keep an eye on your big picture levels. Eventually this market will break, so be ready for it. It could break up, it could break down. Know what your levels are and be prepared for that to happen. So inside day for the SPYs. Qs were a little bit relatively weak compared to the IWM, especially this morning. Are the Qs an inside day as well, or did we break yesterday's high? 413.43. It's an inside day as well for the Qs. NASDAQ still looks tremendously bullish, and I would actually argue that the Qs being a little relatively weak today is actually a really good thing. And you can take a look before I go over to the IWM. Apple was negative today. I do believe, though I'm having trouble getting. Yep, Apple is negative today. Google was negative today. I think Amazon. I'm having these delays again. Yeah, Google down 0.9%. Amazon did finish positive, though it went red at one point. Meta with the upgrade finished decently green. That was a focus for me today. But not a lot of relative strength from some of these big cap tech stocks. But the Russell went, and the Russell was led by the KRE. So we got the IWM here in the quarter, and KRE, the regional banks, had a really strong day today, which is exactly what we've been talking about. The key to this market right now, honestly, in a lot of ways, is these regional banks holding in and improving. The regional bank ETF is up 3.5% at the end of the day today, so a solid sign of improvement. I'm still looking to see if this 36 area can be a higher low in the regional banks compared to the May 5th low, which was 34.52. So today's a pretty productive day. We were strong early in the KRE. We got up to this ADMA on the daily chart and held in and closed pretty well. This $38, there's a lot of levels that this thing still needs to clear. 38's important. 39.40 is really important. And then the really big levels is $42. So I'm saying it over and over again. If the KRE can improve, regional banks can improve, the Russell can improve. If the Russell can improve, then your S&P and your NASDAQ could have some serious confirming breakouts. And then when you combine that information with a picture of positioning right now and how the hedge funds are just dramatically underpositioned, it could lead to some real fireworks on the upside as far as position chasing and squeezing should we ever break out. That's the bull thesis. I could get into the bear thesis too, but today was a bullish day, so we'll stick with that. KRE, again, really strong, helping the IWM to clear some key levels. I think that for these markets, getting above yesterday's high, which the IWM was able to do and the S&P and the NASDAQ didn't quite do it, is somewhat important. I don't want to be overreading a range-bound market, but I think it's somewhat important given the selling that we saw on Friday morning. Friday, from the market open until like 2 p.m. Eastern, we had very heavy selling, a very heavy downtrend on a 15-minute time frame that did manage to reverse a little bit into the close, but it seemed like a pretty damaging morning. And the fact that the Russell is able to be above that and SPYs and Qs are able to test those highs with today's inside day with Russell leadership, I'm going to say is broadly bullish. But we still need this IWM to clear some other key levels. 176 is huge for the IWM. We failed there a whole bunch of times since we broke down from that level back in April 25th. We need this IWM to recapture 176. That's productive. Even that's not enough. 176 is going to be really productive, but show me the Russell get above 180, and I'll show you a market that's probably breaking out across the board. So just continue to monitor that. Again, it's been the same thing here for the last couple of weeks. The market's been range bound, but as a team, we've been doing a phenomenal job finding trades every day in names that are in play or relative strength, relative weakness plays where we've been able to eke out a little bit of money for us. So that's fantastic. Today, for me, the trade of the day was by far this AI. AI pre-announced earnings this morning. It looked great. Expecting to beat, raising guidance, and we know that when this thing wakes up, it can really wake up and have big moves. So I said in the morning meeting, even as it was still trading closer to $20, that it's not impossible to see a run to 25 in this thing if it really wakes up. Well, here at the end of the day, it closed at 24. Just a really good trade. I was able to start buying this thing pre-market just above $20. I was like taking the offer at like $20.04, I think, when there was like a 6,000 share offer there, and I think I bought on the bid a little bit at like $20.01. The thing started to take off a little bit pre-market. When the market opened up for this thing, or was set to open up closer to $21, I was like, oh man, this is annoying because it's going to be one of those trades where I was able to get stock because I got in pre-market, which is always a little bit dangerous, but traders who are prudent and waited for the market to open might not get any. But then it actually gave a really good dip here all the way back down to 2020. I added back stock at around 20.25, which I called out, and it sounds like some of you guys took that as an opportunity to get involved as well. And then this thing was just a monster from that point on. Good initial move, building out a nice bull flag here around 10 o'clock. The ADMA catches up to that base, and bam, you just get continuation. Beautiful uptrend all day. Ended up closing at $24, which is a 24% gain for the stock. So AI, AI is becoming really interesting. I've been starting to think just kind of broadly about the market, and if the last decade, if the 2010s were all about cheap capital and cheap low interest rates and that adding to PE multiples and really cheap financing, it seems like this decade is now, after a lot of craziness in the first couple of years, working more towards efficiency. And you see that first and foremost with mega cap tech. First and foremost, honestly, as much as I bash on Twitter and what Elon Musk has done to that company, you kind of really saw it first and foremost with Twitter, with them laying off 80% of their employees, and then with Meta and Mark Zuckerberg coming out and saying this is the year of efficiency, or whatever that term has been using that he's been using a couple quarters ago. But you really see that across the board with all of these companies, especially these mega cap tech companies, really focusing on efficiency in order to keep their margins higher in an environment where markets have become very concerned about margin compression. And they've done that by laying off people in tech, but they're also doing that by embracing AI more. I know we saw IBM come up with a headline a week or two ago that basically said that they are no longer going to be hiring for jobs where they think AI can do that role just as well. And I think that that's just going to kind of be a continued trend where, yeah, your cost of capital is going to be higher, at least for this foreseeable future, with interest rates where they are now compared to where they were the last decade. But at the same time as that, these companies are really working towards efficiency, and one of the main ways or main drivers of that efficiency that they're working on is artificial intelligence. And I don't know enough about AI as a company, to be honest. I'm involved in Path, which I have a better understanding of, and they're using a lot of AI to automate more general, like office type administrative tasks, and they're using AI for that. And obviously you've got Microsoft being a big player in the AI space. Google received a lot of hate earlier this year about them being behind with AI search and everything compared to Bing, but don't count Google out. They've been involved in AI for a long time. They just haven't really marketed it as a business, I don't think, in the same way, but they're still going to be there. So, it just seems like these companies are really working towards efficiencies. You see that with big cap tech in a really big way right now, and that's been the main driver of this entire market. But you look at a company like AI, and again, I don't know anything about AI's actual business, C3.ai. But when you see those numbers come out, and a big thing that I've been looking at with these growth stocks, it's been a pretty good consistent trade for me, has been the path to profitability, which at this point, if you're a growth stock with interest rates where they are, you're either working your way towards zero or you're working your way towards that path to profitability. And you see that in most of these growth names that I'm trying to be involved in. Even that Carvana, which I traded a bit today, again, announcing a path to profitability in that last earnings report is huge. And AI here is a company that's certainly still losing money. They're in their growth phase, but pretty solid pre-announcement this morning as far as that guidance increase went, and also providing a path to profitability in the hottest name of the hottest sector right now. So this just turned into a really great trade, and I'm glad that a lot of you guys were involved in it. But it wasn't the only one. I did talk about Carvana on a pullback to $10 as something that you could build into. Low of the day is $10.16. So I traded that one. There was a big seller that came in, I think at $10 and where was that seller? Yeah, $10.20. That I just put a big refreshing seller at $10.20. I called out to you guys. I know $10 is a really important level. You can see on the small time frame that the stock was rapidly selling off into it. Refreshing seller at $10.20. I just put a buy stop at $10.21, and then my stop loss once I got executed was $10.15, a penny below the low. So taking on 6 cents worth of risk in this thing as it approaches a daily level, and then it gives a move off that all the way back to $11.60. So that trade worked out really well for me. Meta off the upgrade was another one. We've been talking about this 136 level. It failed on Friday. Today it got the upgrade, and despite the Qs being relatively weak early on, this worked out really well. I started early but small with a plan to build in more or less at the open, understanding how extended it was. I think I got a price of around 236.70 or so. I took a bigger ad at the 236 level while it was still on the way down, looking for a pivot in this ADMA area, and then that was it. Low of the day here is 235.33. Had some stock, worked its way up, and it was a good trade. I ended up closing that one out by the end of the day today. So, you know, pretty much all that worked. Also, Lemonade, I traded really small. I talked about a pullback into the $14.50 to $15 area as a spot that could potentially be viable. The low of the day is $14.81. I never got much stock in it. I had a bigger bid around $14.75 that never got filled. Low of the day is $14.81. So I only had a smaller position up near 15 bucks. But when this thing gave a pop, here midday around 1 o'clock, I was able to, you know, take off some of that $15 stock and put some money in my pocket. Name traded a little bit thinner than I expected it to. I guess the volume on the day is 1 million shares, so it's okay. But, you know, just these technical pullbacks and some of these stronger growth companies that have announced a path to profitability. Uber's another one of those, even though I haven't personally been involved in this Uber trade. It's worked out really, really well. And that was with the bank drop of this a bank drop. Get it? I said that by accident, but I'm gonna go with it. So with the bank drop of the KRE being really strong today. So again, net at the end of the day, we're home on the range. Inside day for the S&P, inside day for the NASDAQ. We are ranging within a range. It doesn't get any more boring than that. But the call outs today, AI, Meta, I think Schwab might have been decent. I wasn't involved in that one. Carvana, you know, we're finding ways to make money every day in what is a difficult market, big picture. So I think that's a really good job, and let's continue to keep it up. I do hope that this market breaks out soon, because I'm still getting a little bit nervous that as earnings season winds down, that we're just going to have less and less to focus on if we're stuck within this range, because it's almost impossible to try to have an idea of, you know, pre-market what this market has any chance of actually doing, and then we can analyze the you know, the intraday technicals as best as we can to try to find an advantage. But I don't really ever feel like when I'm taking trades the market is either on my side or against me, and it's a pretty important layer of probability. So that's all I got, and I'm happy to answer any questions that you guys have before I have to take off and pet some goats. Is Home Depot reporting after hours today? Is that one we're waiting on? All right, question from Kyle on AI. So with AI this morning, I got long after 9:50. Okay, was that this like flag break? On the break of the 9:45 a.m. inside candle. You're lucky you didn't get shaken out. I'm assuming you didn't get shaken out. Although I ended up being in the money, I came very close to getting stopped out before the real move. I knew taking this that the ADMA was not there. Okay, awesome. But I felt with a momentum squeezed in like AI, with all the volume that it was doing, I would be fine to take this trade. Whenever I'm trading a name for momentum with no ADMA catch up, should I game plan to be prepared to get shaken out? For example, had this ticker just had this tick just lower, looks like you didn't get stopped out by like 2 cents, would have pushed you out. The 10 a.m. bull flag with the ADMA catching up offered an even better entry. Assuming you mean the second one here. Or this, is this an inside 5? No, it's not quite. And so in that case, would I just have to accept I got shaken out and get back in at this new execution setup? Yeah, pretty much. So that's always the problem that I struggle with on momentum trades when you're buying. Like I really dislike having my stop loss above the ADMA on a 5-minute chart. Especially the later in the day you go, the worse it is. Later in the day you go, the higher the probability of getting stopped out, and there's a decently higher probability of a shakeout occurring. Because all it takes is a healthy technical correction to the 80 EMA or somewhere between the 8 and 21 EMA before a true pivot comes in where you get your real continuation and you just got shaken out for a loss and the trade works. It can absolutely happen. And it's a thing that I struggle with. Because again, I know myself well, and that's a really important part about trading. You need to know yourself. You need to know what type of trader you are. I know that I am apt to start trading poorly and have my bad habits kind of arise within my trading when I know that I just took a loss in something, but I don't know if the idea is wrong. I really want to know that the idea is wrong. And whenever I'm taking a momentum trade, I guess if I'm getting stopped out, it's proving to me that the idea that momentum was coming in is failing, but I don't know that the stock itself is fully shot yet, or that the market itself is shot and it has no chance of working. So, yeah, I mean, everything that you're describing is perfect. I think it's really important that you recognized that, you know, that 80 EMA didn't catch up, so there was a real chance that you could have gotten shaken out. If a shakeout occurs, in my opinion, the only right way to get back in is if a new setup occurs. Which, again, your risk here is that you're taking a loss on a trade that works. And that's what drives me crazy mentally. Losing money and then the trade, like, works. And it's like, man, I should have used a better stop loss. But in your trade that you're taking, there is no better stop loss. Yeah, I guess you could have used the low of the second 5-minute bar there, but now you're adding a lot of additional risk. And really, the low of the day would be even better than the low of the second bar. I only said the low of the second bar because the volume was so massive on it that you could have used it just because the volume was so big. But otherwise, the real appropriate stop loss is the low of the day. And then at the low of the day, you're 20 cents away from the $20 level, and you might as well be almost using the $20 level. And that's a very slippery slope to play also. You know, whichever one you do decide you're using as your stop loss, make sure you stick with it. So if you're using that inside 5 low like you used, make sure you stick with it. Don't buy your stock, put the stop loss in, see it beginning to come down to your stop, and then go, you know what? Instead of using this stop, I'm going to use the low of the second bar because I don't want to get shaken out. And then you go, well, then I might as well use the low of the day because that's probably the more appropriate stop. And then you go, well, if I'm giving it down to 20, I might as well give it to 20 because 20 is the daily level. And now all of a sudden you already entered the trade thinking that you were just giving it to, 20.70, and now you're taking on an extra 70 cents worth of risk. For every 1,000 shares, it's an extra $700. It's just too much. So I think that the most important thing here is whichever stop loss you're choosing to use for your game plan, that you stick with it. That was the trade that you took for yourself. From there, I think that you did everything you could do. And if you did get shaken out and it worked without you, there's nothing you can do unless a new trade setup comes in, and then you can re-enter. And that's also very difficult, though, because now you're potentially risking taking 2 losses in the stock if that second trade doesn't work either, which is another difficult thing. So that's why, for myself personally, even though I do use the momentum stops, I really prefer to use the stop where I know I'm wrong. And for me, that would have been a looser stop. But then I would have chosen that from the beginning, and I would have sized myself based on that. One other option I would throw out to you is to game plan a trade with 2 stops, where it's basically like you're using 1 entry for 2 trades. I'm gonna take more stock at the tighter stop loss based on the flag or the inside bar, exactly like you did. But I'm also gonna have a little bit of stock and give all the way down to the low of the day, which will be a second trade that'll be a little looser, just in case I get stopped out of the first one. I still have some stock off the second one. So that's something I do as well, where you kind of have a compromise with your risk and have some risk based on both. Appreciate the question, Kyle. If there's any questions on YouTube, if somebody could copy and paste that, I appreciate it. As soon as I start running onto YouTube, the computer slows down, so I don't want to have that up at the same time. So if anybody sees anything on there and they can copy paste it, I appreciate it. From Ben saying that the trend of efficiency has been going on for a few years now with Six Sigma and lean management. I don't know what Six Sigma is. I definitely understand lean management. It's a natural response to global market saturation, and AI is the natural next step in efficiency. Totally agree. From Rex. Today I was looking at Tesla. Yep, that was your call out in the morning meeting today. Today you were looking at Tesla short through yesterday's low. I shorted it right at the open, and I got stopped out. clearly obvious on the chart here why. Then at 9:55, it came back down again. I tried through the level again, through yesterday's low again, I'm assuming is what you mean. At the 9:55 candle, it's a tough trade. It's a really tough trade, in my opinion. So if the market broke the opening low, thinking if Tesla could give me some downside follow through on that, but at the same time, it's still holding above the opening low. At this point, would you wait until Tesla breaks the opening low to short, or use the same yesterday's low level, risking the ignition bar? You mentioned that Tesla 165. Yeah, Tiff. When I'm streaming on YouTube, it gets blurry in the VTF, so sometimes it's recommended for the afternoon meeting that you actually go over to the YouTube link. If someone could post that again for Tiff here, I'd appreciate it. Anyway, you mentioned that Tesla 165 is another level in the morning meeting. Do you think Tesla couldn't break yesterday's low right at the open? It's more likely to chop instead of giving some follow through. Sure. So a little bit of a complicated question. Look, I like your first trade here. You're recognizing relative weakness in Tesla. It was relatively weak early. You identified some daily support around that 167, which corresponds to yesterday's low. You take your trade, you go for it, you get stopped out. One thing that I do think was against the trade is the IWM strength. I know that this is a QQQ name, not really an IWM name, but what have we seen? I was talking about a lot on the radio this morning, that when the IWM is strong and the Qs are weak, it doesn't necessarily mean that the Qs have to go up, but it usually means that it's really difficult for the Qs to give really big downside follow through unless the Russell also deteriorates, and there was no signal for that early on in the day today. So that would be one thing that I would just pay attention to, which I think was a little bit against your trade. But I like that you did the morning research for yourself. I like that you identified a level. I like that you identified relative strength, and you went for it. And your first trade failed. I'll be honest with you, I'm probably done with it at that point. I'm probably not taking the second trade. And I think that your second trade is particularly difficult here because of the stop loss. I guess you could try to call this an ignition bar because the volume picks up at 9:55, and you could just use the high of that bar, which is 167.63, as a stop loss. I really think that the more appropriate stop loss is honestly the high of the day at that point. It takes some serious conviction on the short to go back after it a second time. And I just don't know if I would have had that conviction given what I felt like the right stop loss would have had to have been, plus the way that the Russell was holding up. I really think that the Qs were going to be able to further deteriorate. So that's kind of my general feedback for you on the trade, and I hope that helps. Retail sales in Home Depot tomorrow morning at 8:30. From Steve on YouTube. I've seen SoFi in your disclosures for a while. Any thoughts on the suspicious downgrade today? Yeah, it was a little odd. I did go over to Stock Twits real briefly early this morning to figure out what was going on because the news wasn't getting piled into the VTF yet. Stock Twits is just this cesspool of nonsense that people really write in there. I almost never look at it. But when I was scrolling through the comments there were all these conspiracy theories about the analyst that downgraded it to 250, and I will certainly agree that it's strange. And anybody who has been working with me for a long time knows that I have nothing but disdain for sell-side analysts as a complete general rule. I think that they have extraordinarily perverse incentives. It's particularly strange that it sounds like the same analyst, after that earnings report, downgraded the stock with a price target of 750 to 5, and then downgraded it again from 5 to 250, but there's been no new appreciable news for it. And I agree with everything that you're saying about the company. I really like the growth and trajectory of the company. I really like how they have handled and weathered this overall banking crisis that we've gone through. Talking about paths to profitability, they have a very clear path to profitability. The way that this company's turned itself around, starting as a company that dealt in specifically student loans, which there's been no student loans that anybody's had to pay for years now. It's incredible that this company has been able to even stay in business, but they've been able to revolutionize their business and get involved in other things, and they got that banking charter, so they are officially a bank now. But because they're also more techy, they've done a fantastic job weathering the storm of the regional bank crisis. They also figured out a way to increase basically their FDIC insurance from $250,000 to I think $2 million for their customers. It's incredible. I even really liked that last earnings report in the beginning of May, even though they sold it off. The one thing that I didn't really love was the slowdown in the Galileo platform, because that's user growth on those types of things is something that the market loves to see and very much punishes companies otherwise. I thought that they completely oversold it off that earnings report, and then when it had this really strong bounce back off the low here on May 4th, I thought this thing was starting to look great again around this 450 to 460 area, around 440 to 460, so basically 450. I thought this thing was looking great again. And then fine, relatively weekday. I think there was a weekday for tech when it rolled over a little bit. I was surprised on Friday by the degree of weakness, but the market itself was weak. I was really surprised to see this thing back at $5. And I was very surprised to wake up and see this thing trading at $4.60 this morning. I bought that. I actually bought the heck out of it. I probably bought more today in SoFi in one individual day than I bought in a while, specifically around $4.50. I took a really big, I just put a buy stop when it went below 450, I think at 450, and I just bought a bunch of stock there. It's a little bit of a bigger picture trade for me. I've been involved in this thing for a while. I've been trading the ranges in it in a while. But that bigger buy I took, I'm not looking to sell any of that until at least the 80 EMA on the daily chart, which right now is at $5.15. It'll continue to come down. Honestly, I'm probably looking for even a little bit more than that. I love the trajectory of the company. I think it trades at a discount to the growth that it's putting in at this point. The only issue with the stock from a trading perspective is it just trades so thick. It trades so thick. It doesn't move well. The point where I would love for them, honestly, to maybe consider a reverse split, but I wouldn't want that reverse split to be more than like a 2-for-1 split to bring it up to around $10. Just to open up the liquidity a little bit more, because the stock trades so thick. But the CEO, who I think is doing a great job, every single time there's bad news, this guy comes in and takes a stand. I got a lot of respect for that too. He did it back in March as soon as SVB was blowing up. He said, "Oh, you want to hit my stock back down of SVB? All right, I'll buy some here around $5." He did it, I think, after that earnings report. "Oh, you want to hit my stock down after an earnings report with how my company's doing? I'll buy more." And he did it again today. So, a lot of respect to that CEO for putting his money where his mouth is. And I like it from a fundamental thesis point of view, but the technicals are atrocious. There's downside extension here, which is why I was doing some more serious adding, because I have a thesis and you got the downside extension, so there's a trade there. But, for the most part, this thing's been really dead money. And I've been day trading it every day around my core position, buying it back and forth, trying to create some cash flow out of it, which I've done a decent job of over the course of the last year. It's been stuck in this range around here for a full year. I remember trading it at the same prices back in May. Let me fact check myself and see if it was trading at the same prices in May. Yeah. May. When it broke $5 in May. Yep. I remember trading at the exact same prices back here literally 1 year ago. So this thing has been stuck in a range between 8 and 5 or 8 and 4 for a full calendar year. And I've made some decent cash flow on it over the course of that calendar year. But I'm continuously disappointed that this thing can't break up. I really think it belongs at $10, and belongs is in air quotes, because I can't tell the market what to do. But yeah, I'm still involved. I took a pretty big ad on that. The downgrade, suspicious, sure, but sell side analysts, is what it is. Looking through here on the VTF from Kyle. Just curious, could anyone in here be able to explain the WDC merger news and how it affects MU? I don't know Western Digital's business well enough to be able to answer that. But I know that that's why MU was relatively strong today. Was a secondary to WDC, and shout out to Dimitri and Pat in the VTF for providing that information this morning, because it was really good to know. And that was another good trade, by the way, that I was not involved in, but some of you guys had, which was Micron 62. We discussed in the morning meeting today as a level that you could look at, and then it gave this great looking, you know, I love when stocks do this. Rest for 30 minutes, or in this case, almost an hour. Let this ADMA catch up, really tighten up, create intraday support resistance. ADMA catches up and you blast off. I mean, it's so technically perfect. And we identified it here post 10 a.m. for traders to be involved in, and some of you guys caught it, and there's fantastic follow through on it. So, awesome. I can't tell you the specifics of the news. I don't know the companies well enough. But I can tell you that we got the news in here and then combined it with the technicals for it to be a pretty solid trade. So, unless there's anything else on YouTube that I can't see because of the computer issues I've been experiencing for the last week or so, I'm going to wrap it up because I got some goats to pet, apparently. So, have a great night, everybody. Thanks, Eddie. Have a great night, everybody. I will see you all tomorrow morning. We will analyze the gap. We'll see if we're able to get above or below the inside day. And hopefully we can continue to find in-play stocks to pay us, because we've been pulling that off on a day-to-day basis, and it's been impressive. So have a great night.